onto YouTube. Hello everybody, I hope everybody's going well. Scopes here on to talk about smart money concepts and more. Okay, there you go. I've just started the live stream on the internet, on YouTube. Let me just zoom into the screen a little bit.
Yeah, is it ready to start now then, yeah?
Yep, whenever you're ready, mate. Whenever you're ready.
Right, guys. I know I've been on for a while on a live stream. I've been super busy. Today, I just want to go over what I've been trading and my trading style for the last month or so, month and a half. I have traded in this in the past, but I've literally decided to write this up as a course because it's been profitable in the past. But I like to try different kinds of smart money and stuff like that. Test new things with it. But this is proven to be very good. Of course, obviously, there's always losers. I'm not going to say that it's a 100% strategy out like that, but it works for me, and it's been working for me. So yeah, the last week, I think it's just because of the action. Last few weeks, should I say? I think it's just because of the action why we haven't had as much big moves. But we're going to start over on what I trade like at the moment and what I'm going to be trying to accomplish following on from this. So this strategy is most of the stuff I've learned on smart money. I did my live stream before that was on like I'd learned everything myself from there and watching videos on the internet. So everything I've learned, I've watched or I've took courses on and I've paid for. Some has been rubbish what I've done, and some's been good. But I just like to look through and test everything and find what works for me and what I like to understand and stuff like that. So this particular strategy, I am putting it all into a course on David's Discord. It's a closed channel at the minute. There's only a couple of people in it, beta testers and stuff like that. But I just want to go over how I do it and how I get along with it. So it is. I've got quite a lot of images here. So let me just try and sort some stuff. I'm not going to sort much out here, am I? Right. So this strategy is it's a bit of something like a double. It's like a double order block on 2 time frames. Now this works on all time frames, but because I'm so busy lately, I've been trading on the hour and the 15 minutes for the entries. So it's like a double order block, but not the order block as everybody would think. So let me just draw a quick thing for you. So what everybody thinks are, there's lots of ways to trade if you're following smart money concepts, but what everybody thinks as the order block is these. And I'm sorry, I'm a bit slow with this computer stuff. So everybody thinks this is in a way, but they think this is like their order blocks. Which they are right, but it's just order blocks are just another support and resistance zones, buy and sell. But what I've been trading lately, order blocks and POIs, double order blocks. So, and we'll go over some trades in a minute, and I'll show you how I come across it all, and then at a later date you might want to go through my channel, what I've been creating, and you can see all these definitions of everything I've done and how you get about it and stuff like that. So first of all, these are what I've traded in the past. Order blocks. This is what I've traded in the past. What I've recently just switched up. So this, I still have these in mind, and I still see them on the chart. But with so many people trading them, they still work, but I don't think they're going to be as effective as they used to be. So what my strategy consists of now is the double order block. So double order block or POI. So what you want to do is you when you're looking at your market structure, when you load a chart up, you're waiting for like a break of structure. So when you've got your break of structure, you have to analyze the wave, the breakout wave. And then you find your POI by looking for institutional candles. The first wave will be the sign. If it's got imbalance in the wave, that's the sign that smart money's in the market. So what happens then is this is just a sign with there's imbalances in this wave. You wait for the pullback. Ideally, it's not always, but you want it to come anywhere under 50 is okay. But ideally, for your best possible entry or your best possible market strength, sorry, 2 seconds, is to wait for it to come into the discount zone to buy or sell. But I've noticed by looking, a lot of smart money traders want price to be manipulated back into around the 75% mark, 75% retracement. So that's why I use this full. Can you all see this clearly? These numbers on chart, or is it a bit small, or what?
No.
No.
Maybe a little bit small. Yeah, a little bit small.
It's too small. Is that all right?
That's getting better. Yeah.
Yeah.
Thank you very much.
So what you are wanting to look for is the breaker structure. So this is your sign. If you've got imbalances in this breaker structure, so to say, sorry, you then want to, then you know the smart money in the market pushing it up. And then when you start to see like a drop in pressure all the way up to the top, you know that there's no more sellers in order for buyers to keep going up. So then obviously you start your natural pullback, and this is into this zone. When you see this into this zone, what you're going to wait for then is the first wave and the first pullback wave. I mean, you can trade it, but for me, it's, if you want to trade it, yeah, you can. But for me, I always find it better to get in on the second wave. The first wave there, this is your first pullback, this is your second wave, second pullback, and so on. So what you want to do then is, you know that there's imbalance in this breakout wave, and it's broke it nice and cleanly with multiple candles. So then what you want to do is see that it comes into this discount area. It doesn't matter. It doesn't have to come into the 61 to 80% mark, but that is like the kind of the market place where I would want to be buying. I don't really want to buy just on the 50 zone or like that. I want to buy really cheap. I want to wait for it to come right down. If it doesn't come right down, I mean, I'd still follow the market, but I'd have to see what it does after. So this is on the hourly. So when it does this, you wait, you mark out here, then you had your breaker structure. So then you mark out this after you've seen this pullback start. you mark out this, and this would be a continue the structure, CTS. So, and then you would mark your breaker structure. So what you're looking for now, let me just change this color so it's a bit more clearer. 1 second. So you've had your breaker structure, you've analyzed the pullback, the breakout wave. It's broke structure cleanly. There's left imbalance. You know there's smart money. We've started slowing down up here, and then we get a nice natural pullback because there's no more sellers left. So when you start to see this pullback, you don't have to wait for it to go all the way back to here, but it would be a good idea to wait for this pullback to show you signs of ending, like wicks or smaller candles, less volume, or anything, just to show you this, that the pullback is about over. If the pullback goes way past, it's not a market for me. If the pullback only pulls to the 30% mark, the price is way too expensive still to buy. I would skip this trade, even if these candles in this breakout wave are massive. And I know that there's quite a bit of buying pressure there, and it only pulled back to the 30 zone. I would still not buy because it's way too expensive. Because what you could see then is you could potentially see like a pullback into the 30 zone. Then you think it's going to break, and then all of a sudden big wick down. You know, back to these type of areas, to the discount areas. So I always wait for this. And then when you've found your pullbacks ended, or you're not going to know if the pullback's ended, but you can get a good indication by following price action. And I will go over some trades that I've been taking, following everything that I'm showing. So when this starts to come back up here, you know, then you can mark this out as a breaker structure on the hourly. So when price has gone over, if it doesn't break this on this pullback wave, if it doesn't break the breaker structure, you know it's going to carry on and break the CTS, the continue the structure. You've got your breaker structure, so you're most likely looking for the continue the structure. So after this, when you get your next pullback, this is where you switch from here. You broke the CTS. This is where you switch from the 1 hour structure to the 15-minute structure. But without indicators or without anything, you would have to mark your structure out if you want to see it. I mean, once you've learned to do it, you don't need to mark it all out, but it's a good idea to mark it out. So then when you get to this one here, you're waiting for this second pullback. This is the place where you want to be trying to enter, because you already know smart money's in the market. It showed imbalance. It showed a natural pullback. Then you're waiting for another breakout. So then you wait for the breakout. You wait for the natural pullback again. So what happens then when you get to here? You drop down to the 15-minute chart to watch this move, watch this pullback come down, and you follow the structure on the 15 minutes. When the price is coming all the way down, you fib your second pulse wave. Find your institutional candle, which would be a candle below the 50, but the best one would be between the 60 and the 80%. So this is your hourly candle. Bloody hell, I don't know what's up with me today. So this is your point of interest, your order block, your supply and demand zone, whatever you want to call it. But for me, I call it a point of interest. This is your institutional candle. And you're waiting for price come back down, but you are in the 15-minute watching this come back. So the reason you're in the 15-minute is so you can get your better entry. So once this is touched on the hourly, you know you've got your institutional candle. You're watching it back. When it's hit this institutional candle on the hourly institutional candle, and a lot of these institutional candles on the hourly can be a bit bigger. So what you want to do then is, because you've analyzed this pullback wave in the 15 minutes, you want to then mark out when you've hit this area, your hourly point of interest. You want to mark out your breaker structure on the 15-minute, because in the hourly, this is an uptrend. The hourly is a pullback, but on the 15-minute, it looks bearish. Everybody, if you just loaded the 15-minute chart up, you'd think, well, we're bearish. But this is just watching the pullback on the hourly. So the reason you mark out your breaker structure on the 15 minutes is for you to find your entry from here. So when you've got the breaker structure on the 15 minutes, you know then that the higher time frame, the 1 hourly, and the 15-minute, when you get this break of structure, you've got this breaker structure, you know then that your hourly and your 15-minute, or your high time frame and your low time frame, whatever time frames you're trading, you know that they're both facing the same way because they've had a breaker structure. But that's not the end of it to enter there. So you do the same as what you did here. When you get the hourly break, you do exactly the same. You mark out you fib the breakout wave on the 15 minutes. So when you get the 15-minute breaker structure, you analyze the 15-minute breakout. Was there imbalance in this breakout wave? It doesn't matter if there's no imbalance, but if there's imbalance, it gives you more confidence that smart money is wanting it to push back up, because it's come back down on the hourly. It's retraced to an institutional area or candle on the hourly, and then on the 15 minutes, it's broke structure back to the up. So it means both of your time frames are facing the same way. So then you fib your 15-minute breakout wave, and then you find your institutional candle. I know it might sound a bit too much, but when I go over examples, you'll see exactly what I mean. So if you don't, you can jump in and place a trade or place a limit order on this hourly institutional candle, but the size of each one is completely different. So the reason you wait is double confirmation, it's a double POI, and the 15 minutes obviously is going to give you a tighter entry, a tighter stop loss, which we'll just see what they do here. So just say, let's target that. So on the hourly, you've got, it's not going to always be this big, but on the hourly, just as on this example, you've got a 2.79 stop loss. But then if you waited for the breaker structure on the 15 minutes and found the institutional candle on the 15-minute breakout wave, your stop loss would be minute compared to the hourly. I mean, the hourly, you can take trades, and I have took trades on the hourly, and I've had decent trades just off the hourly. But that's when the institutional area or the POI is very small. If the institutional candle's small, I'll think about placing a trade on the hourly or a limit order on the hourly. But you can see the difference. This on the hourly is an 8.8 risk to reward, and then if I would have waited for the 15 minutes, this is a 23. Sorry, the same target, but you've got around a 22, 23 risk to reward. So I'll just go over a couple of trades I took, and this is and they're all recorded. These I've put them all in my my channel, and I've put them all in my course what I'm creating, just to show you. So let's find one. Go over that one after. Decent one, but go over it after. So here's an example, and it's recorded. So we had this breaker structure. Can everybody see this clearly? Yeah. So
yes, I can see it.
Yeah. So what you want to do is it works everywhere. It works quite often and works almost. So what I did was I loaded the chart up here a few days before I took the trade or whatever it was. But with smart money, you can wait for a long time to get a trade because you're following smart money. So what I did was seeing the breaker structure here on the hourly, waited for it to come up. Like when you see stuff like this, just ignore it. It's gone straight up. We've got imbalance straight out of it. We've got imbalance all the way up, straight through. So you know that is a very, very, very strong breaker structure. And you can then do what I said. So you can fib this. If you can't find an institutional candle on your hourly, you drop it down to the 30 minutes. And it's the same with the 15 minutes. If you can't find an institutional candle on the 15 minutes, you drop it down to the 10 minutes and you will find one. So I marked this area out. I think this was on the 30 minutes or 45 minutes, but it's a big, obviously we had a massive big candle imbalance. But if I fib this, this is in the range what I'm talking about. This just say like the candle could go into, could start like at around the 50 and it could end at past the 80. So that's why it's always better to mark your high time frame out and then wait for it to touch. This entry, I had an alert set here, but you can see it's a big wick. So I knew from here we was gonna go up because we'd hit an institutional area to go up. So when I'm watching this pullback to this institutional area, we're looking for your breakout. Yeah, you're looking for your breaker structures. Now this purple box is the range. So a lot of the times when you see any kind of big move, you'll see a range. And what I do then is this breaker structure is still valid, but I will wait for a bit of, you know, a bit more clear. You can't really take entries on anything like this. It's not good enough. So what I did here, what I do with a range is I wait for it to break out. So it's broke out of the wave and then it's broke this structure. So we've got a massive candle here with a massive imbalance. So we know that that is a valid break. There's multiple candles closing. But then you see when you come to the top, you see the wicks coming back down because they can't keep going anymore. So what Just, so what I did then was, as I said before, fib this, breakout, and this is your institutional candle. One second. This far. So what I do then is when I see so what I see then is, remember where I was? Here, look. We've come to this here. So I've probably gone on 10 minutes there. So completely somewhere. Right, so it's because I have my entries up here. So what I've done then is I've watched this go down and touch the hourly POI. It's not closed below it. It's wicked below it, but it's not closed below it. So what I do then is, because I've followed this on the 15 minutes, the pullback to the 15 minutes. So then I'm marking out the structure, where the structure is in these areas. So these show that you've got a break in these areas. So then you're fibbing from here, and you're looking for your institutional candle in the 61.8 or something like that. So this was the candle. I didn't find one on the 15 minutes on this particular trade. I found one on the 5 or the 10. I don't remember which one it was, but the institutional candle, this is where it's come down to. And then we've had the break here, we've had a break here, and we've had a break here. This one here is not the strongest of breaks. This one is the strongest of breaks because it broke out, tried to come down, but carried on going. But that, I wouldn't count that as a high or low because it's not enough. It's not pulled back to be decent structure. So the POI then on the lower time frame for me was here. So this is recorded in here. It's in my channel. So what I do then is I wait for price. When I've got my institutional candle after this is my lower time frame. Just say I've only got the 15-minute on there. So I always put a 15-minute. Sometimes I'll find it in the 5, sometimes I'll find it in the 10. So what I did here was when I've got this, after it's touched the hourly, wait for some kind of break of structure or some kind of sign that we've got a movement carrying on. And the way I get my entry is I fib the actual institutional candle or POI or whatever, however you want to call it, and my entries are always around the 30 to the 50. A lot of the times I'll try and get it. I try and get it just above the 30. So that's where I would put my limit order. bear in mind we're only up, we're up here somewhere because we've watched a breaker structure here. We've watched a breaker structure here. So my limit order will go in when we're up here. So then I've set this limit order up. That's the price I want to buy. And my stop loss will go just below. The reason that this is probably set like this is because obviously when I check this in the hourly time frame, I always leave one of these there. So then when I set an alert at just say this area, when I load my chart up, this is what's alerted me to load the chart up, and this is what I was looking at when I set the alert. So I know that I'm looking for a long opportunity. So that's the hourly. Then I've set my limit order around here somewhere. The stop loss would just be around here, or however you would have done it. And I think I targeted. In fact, if that's there, I've probably targeted there, or I've probably targeted. Now, when you've got an alert saying your limit order's in, and you've opened your trade, then you can drop back to your hourly page, and you can look for your targets. Now, this particular target came from, I think, a week. I think it was a week high. What a swing failure, or a week high, or something. I had something in mind for this trade, which I targeted, because that's like the recent structure. Obviously, it's failed, so it's weak. Then I'm in the trade. There's my trade there. This is recorded in the actual, in my actual channel, but you can always target that. So then there's multiple ways to follow this. There's break the trend, and there's break a structure to follow, and then there's follow the trend. So obviously you're breaking this structure here, and then obviously if you want to get in again, there's follow the trend. And to follow the trend is just literally, it's the same kind of thing, but you look for just the current wave that you're in to take the entry. So if I just cancel this and I go back a bit, see, these are all trades I've taken in that one time. This one is the same, exactly the same. Find the wave, follow it, mark out your CTSs, your BOSs. This is my BOS line. If it doesn't break that, and you just follow the steps that I've actually said. This is another one, exactly the same. So here we go again. This one is another trade I took. I'll just delete these fibs because you can't really see. So this one's quite a big one. So what you're going to do is I'm just going to go over what I thought when I was taking this trade. So it's going to show you exactly how I see things. So you've got this uptrend, which is obviously it's marked out with this green line. I don't really use trend lines and wait. Is that someone? Oh, I don't know. So
That's right, I sorted it for you.
yeah, I can hear something. Just in.
Let me see if anybody else needs.
I don't know. Some music and some stuff.
I just muted the Safi Mees because that was the background sound.
Right, so what I'm going to be doing here is I've got all these are inside of my channel. This is like knowing where smart money is, knowing where retail is. Retail obviously is small candles and wicks, no imbalances. Retail, I mean, smart money is obviously big candles, big imbalance. So when you can define stuff like that, you're in a good, well, you think you're in a good place to trade. You're always wanting to be trying to follow smart money. When I say smart money, I don't mean I'm some big trader or not, because I'm still a retail trader. I'm just trying to follow smart money. That's all I'm trying to do. So here's another one I took. So what I did here, obviously we're in a massive downtrend, but you can't really fib that full lot and wait for that. If you're going to wait for that, you just say this was your institutional. You're going to be waiting a long time for that to hit. So you're always going to be market. I know people go on to the charts every single day. But for me, sometimes I wait for quite a few days for an entry, or sometimes I can wait over a week for an entry. So this is a better example. It's more clearer. So what I was doing here is we've got a nice little uptrend, but we're still in the downtrend because we've broke nothing major. We have had a little break of structure down here. So what I do normally in my head, but if you wanted to practice anything like this, is I just mark this. So what I do is just mark the structure out, just following it. So what you're going to do is every time you create this or this, you're going to mark this out as this, because you're in a downtrend. This would be your breaker structure. This, because you are following the market, this is going to be a continue the structure. Now, if at any point when you see these, when you see this like kind of zigzags, your high highs, your lower lows, or whatever like that, you always want to mark your most recent out. And when you see like this pullback here, you're hoping that it's gonna break this CTS because you're in a downtrend already, and you're hoping it's initially it should be just going like that because you're in a downtrend. But a lot of the times you'll see the price pullbacks there and then break that. So that is what you always mark it for, because you're following the market and you wanna keep up to date with it. So if you don't break the breaker structure, you will continue the structure unless you go into a sideways range in between two, and it does happen, and it's happened for nearly a month. So let's get back to this then. So I'm following this on the hourly. This, like I say, this is not the trend line I put on. This is just to show what I was showing someone last week. This is just like a little. So when you're following this all the way up, you want to be like marking your break of structure, because this is a little uptrend. You want to be marking in your head. You don't have to mark it, but if you want a clear picture, you can just mark it up. So each one of these is going to be this one, because you're in now an uptrend, this one's going to be your breaker structure, this one's going to be continue the structure. Same again, every time you have a push up, you've pulled out of that, you mark then. When you're having a pullback, you mark that, and you mark that. Now, obviously, when you're in an uptrend, these are going to be your breaker structures. These are going to be continue the structures. So if you're not breaking out of here, when you're having pullbacks, if you're not breaking past here, then you know you're going to be aiming for the next one. Same again, everywhere. You just mark out your breaker structures. So this is why I've done this one. And this is why. So if I was following this like someone else, I would have had all these lines done still. But after they've been and done, you can get rid of them, and you're just back to the recent price. So with this one, this was my breaker structure. As I said, you're following the zigzag, you're following the higher highs and lower lows, higher highs and higher lows, sorry, in an uptrend. And you're following it with the breaker structure lines, and you're waiting, and then you're following with the CTS lines. So you're either waiting for this break or you're waiting for it to continue the structure. So then what we had here is reach the top. I've marked out my CTS, the continuous structure, because I'm expecting this wave. I was expecting this wave to push up because of the uptrend we was in, but it didn't. So the next possible thing for me would be, now we're waiting again. So this, when it started going up, it didn't break this, and then we come back down. The most recent and most significant from the uptrend, this is the breaker structure. So it's pulled back, it didn't break it, and then started going up. So a lot of people would believe it's going up still there. But if you would have found this trade, if you would have got into this trade down here, even if you waited for that breaker structure to happen, you would still be in massive gains or massive profit. So it doesn't really matter if you're giving away this little tiny bit of, it don't matter if you didn't cash out there and you're just giving this much away when it's broke or something, because you've already got a decent trade anyway. Now this, like I said before, this works on different time frames, lower time frames for people who want to scalp it, and it's easily enough done. So now this one here is a weak high. A swing failure. So we've broke down here to this break of the structure on the hourly. We've broke it with more than one candle. We broke it strongly with a strong candle, bigger than all the rest. The reason I didn't mark this up as a breaker structure, is because this is a range. You can't trade in ranges at all. Can't. Well, you can, but it's not advisable. Lower time frames, you might be able to get a couple of little scalps, but it's not ideal, and it's not very safe to me. I have got a little way to trade them, but it's not very accurate or not very good. So now we've broke this structure. Now what I'm doing is we've broke it there. So as I said before, we're fibbing from here. When you're seeing this nice pullback here, this, when it's come down to here, as I said before, if it's around the 30 zone, I wouldn't trade it. I wouldn't try and get in the trade or anything like that. So you see a nice pullback, and this is why, because you could just jump in. If you see a breaker structure and people are like, right, there's an order block here, I'm going to jump in to this, and then they'll notice why it don't come back up. Because in my way of trading, this breakout, this breaker structure wave, And this pullback, that is just my signal. That is just a signal. If I've got imbalance like I have, I've got an imbalance here. Got a little imbalance there. If I've got imbalance in this breakout wave, that means to me, that's giving me the sign that smart money is in the market. It doesn't always work, but a lot of the times it does. So I've got this here and this pullback. So when I've fibbed the full breakout wave, it's pulled back to a healthy spot, pulled back into the 60 to 80% retracement fib level. So now I'm just following the market. Now this is where we're gonna try and get entries. So when you get this next, you've got the breaker structure first, you've analyzed that, you've got imbalance, you've waited for the pullback, the first breakout and the first pullback. There's your sign that smart money's in the market. So then when you know the pullback's ended, you mark your breaker structure up and you mark the recent CTS. So this is your pullback, that's where your pullback's ended, you're coming down, and then this is your CTS, this is continual the structure. So you're following that down. You want to be fibbing the area, and you want, obviously in the down you want an up institutional candle, and in the up you want a down institutional candle in the 61 to the 80%. So you have two here. You've got this one here, this white up candle, and you've got this here, this one here, this white up candle. So these are your POIs for the selling on the hourly. So you want, if you want to then, when you reach these, when you want to try and, if the candle's small, you can try a limit. But like I said, look, if there's two, like there's one there and one there that reach into it, if you drop down, I've gone way past it now.
Pardon me.
All right, yeah, I'm here. So when you drop down, candles are a bit clearer, but some of them are a lot smaller. So this is like an area where you could be selling. If I was to get in any of these on the hourly, because the candles aren't very big, first one would have been a fail, the second one would have been a win. But when you're coming back down into this, you're following it with your CTS marks, following it with your CTS, CTS, CTS. Now, when you've come back to here, you're expecting price to come down here. It's not come down. It's not, it's not touched it. But you can see it's gone straight into a range, and it's not. This is where you don't really want to be taking your trade from here in this range. So what I'm normally doing is when we see a range, I'm waiting for, we've not gone over the CTS, so we're not continuing down anymore. And your breaker structure is up here. This is not a valid massive break, it's just a wick. There's no like serious close below it. When you get a break above it and you get a close below it, look at the instant reaction. The candle is almost twice the size of this candle with no wicks, and it's strong. And look at the strong movement down. So for me, the best breaker structure that from there is this one. And as a rule, I've got all the rules wrote down in my channel. as a rule, when you see this, if the market pulls back and then after the pullback it goes into a range, you wait for clear market structure. Just put the hourly. You're waiting for clear market structure because there is no point. It's not. So this is another trade I took as well. So what I normally do is in my rules is if we've not got a massive valid break, you don't count that. So you're not going to mark an institutional candle because look, we've not closed above it. We've literally just wicked above it. So we've come into this range, we've got indecision candle here, and then we're in a range. So what I'm going to do then is I'm going to follow this range. And then I wait for the first breakout, and it happens pretty often. If you want to ever go and have a look at all your ranges, it happens pretty often. We're in the downtrend. The longer the range, the more chance it's got to go the other way. The shorter the range, the more chance it will go in the same direction as it's going. So what I've been doing is I've been waiting for little ranges to be broken like this. The first broken, and what a lot of I'm not saying anyone who's watching me does it, but I'm just saying what I've found a lot is with retail traders and they want to rush into trades. I'm not saying I'm not a retail trader, by the way. I'm just saying I'm trying to follow smart money. So what they normally do is they see a break here, and this, when you're watching it, because of the size of the wick, it would have been a nice big candle. So everybody's seen this big candle without waiting for it to close or to see what happens, and they think, right, this is the 15 minutes. It would have been, or the lower time frames. This would have been multiple candles broken below it, and then they would have thought, right, because it's broke of it here, we think we're going to be going down. It's broke, so they're in there, and they would have lost some money. So what I normally do is when you get your first break, I always look the opposite way. Every time I get a break of a range, the first break, I look the opposite way. Because that's where I think it'll go most of the time. And then follow the structure. It's not a very clear structure. We had a little break here. Then we had a break up. Marking your BOS out. This is your hourly BOS. So this is your internal BOS. This is your external BOS. This is the BOS you want to see broken. This is the BOS, but it's just internal. Then what I do then is same rule again. You've got your breakout. You fib your breakout wave. This is on the hourly, and if you can't find institutional candle in there, this would be one. And if you go on to a lower time frame, there'll be one in here. And this is my signal. I don't take trades off of this first breakout and pullback. I wait and see this and this. These are the signal. We're changing direction. We've got imbalance on the breakout. Imbalance up here. This one got filled, but again, this is why I don't. If you look here, just delete this one again. If you look here, people would have seen this big candle, this first down candle, and then this second one being bigger and thinking that's a natural pullback, when it's not pulled back into an area where you would want to be. And if you look at the candle on its own, the first down candle, it's actually indecision candle. So it's not really a signal. So this You could count it. I wouldn't, because like I say, it's only in this little, it's only a retrace to the 30. So what I do is I wait for a full wave. The full wave. This is my signal. We've got imbalance there, imbalance there. This is just on the breakout candles, on the breakout wave, should I say. We know that now what we're doing is we're waiting for price to come into the 61. I already marked it. I mean, I already showed you where it is. It's around this area. I'm waiting for price to come back down there. There. Waiting for price to come there, and I've marked the external then, the external BOS. It's broken that. It's not very strong, but it's broken it. But we've already had so much of a strong internal break here. We've had the signal. So then what I do is I wait for the next one. This is my CTS line, this green one. Just delete this breaker structure line. Just delete this fib. These lines are just following the structure. So as you can see, this is your 61.8, your 80 zone. We've never ever closed below it, which is what always happens. So then the next area is around here. These are my closers. This is my CTS line. We've broken it. Not massive broke, but we've broke it. So then what I do then is I drop down on my time frame when we've hit the hourly. You watch the natural pullback on the lower time frame. You mark the break, which will be here. So you're watching after another break here. Did you see on the hourly? You saw on the hourly that this wasn't a very valid break. On the hourly, it was just wicks. But on the lower time frame, it's a massive break. Same as here. These imbalances were only small on the hourly, but they're big on the 15 minutes. So now we've had the signal with the imbalances. We've had the breaker structure, internal, balances all the way up. Then we're waiting for a natural pullback. The pullback comes into the 61.8 of the breakout wave. Now this is the wave we want to be looking at. So this one is your next breakout, your next CTS. You've broke it, so you know that price. You're hoping now that price will come down into this institutional candle on the 15 minutes, and you're hoping it, obviously it pulls all the way back to there. It doesn't always pull back to there, but as you can see here, if I fib this full breakout wave, what do we have here? This is a candle that's marked out. Not the clearest of candles. If you would have gone down a bit more time frames, I'm sure it'd be bigger and there'd be a clearer signal. But this is where I put the entry. It's all recorded if you want to go back and check any of them. This is where I put the entry. I didn't jump in on the hourly. On the hourly area, I waited for that as a signal, and then I marked the 15 minutes out, and I placed a limit order on this. So I got this CTS, fibbed it before it come down, fibbed it, set a limit order up just above the 30 level, stop loss just below, and then when you've opened your trade, like I said before, you can go back to your hourly or even 4 hourly, whatever you do. So then the target is previous failed swing that started this downtrend. This is your hourly downtrend. That's a failed swing from an uptrend. That's where I'm targeting. I mean, you could target, you could just target structure. But what I like to do when I'm in the trade is I like to follow them. I like to follow it through. So this was my TP, and it's recorded, and it hit it perfectly. But what I do, what I do then is when I'm following this, I mark out all my. I follow it, mark it out with the CTS. You know, if you're not breaking this, as I said before, if you're not doing the breaker structure, but you're pulling back into the 80%, you know you're in a healthy market. It's pulled back into the 80%, it's pulled back into your institutional candle, it's wicked you in, and you're going. So it's not broke this, so then that's a valid BOS. It's not broke it, but it's a valid line to follow. So the next point, like I said, is there. It's your CTS. If you don't break the structure, you're going to continue the structure. It's most logical thing. So you could, if you wanted to, when you've been wicked into this, I mean, I only got in by a few dollars. It is recorded, so you can check it over if you want. I only got in by a few dollars, but I got in. And it's a thing. You could really, if you wanted to, you could target this, and you would have had a winning trade still. But I like to target a bit of a bigger, and just went, collected my money. So as it's still going, I'm already out of this trade at this area. As it's still going, carrying on to mark out your continual structure for your next trade. So the reason I didn't re-enter on this is because I didn't have a retracement. I know it retraced into a discount zone, but it didn't come back into my hourly institutional candle. So that's why I didn't re-enter. But let's buy 1 hour. It didn't go into it. But then we come into the discount zone, and I have here my continue the structure. Price would have come into this POI. I would have probably gone down time frames and looked for an entry, thinking that we'll go above that. But it didn't. It went past me 50, but didn't go. Look at the size of the candle there. So, I mean, if you would have joined in on your discount area, but it's not a rule, is it? If you're just joining in just because it's below 50, that you need like an actual plan to enter your trades and your trades. So this is the institutional candle I marked out after this wave. Obviously, it didn't pull back into it, so there were no trade there for me. Big push up with a big candle. So that to me is a valid low. Then, even though it's not gone into this area, it's still a valid low because it's not a range candle, it's not a doge candle. It's literally a strong candle pushing back up. So I just keep following. I'm hoping, because we've not broke this level, I'm hoping obviously it goes. Not broke this level, so the next point is going to where I'm expecting it to go. Didn't get the entry. Broke the structure now on the hourly. So we've broke the structure. So we're not continuing the structure now. We broke it. So now market's changed into a downtrend. And this is just how I follow it. Put the size of that for a downtrend. I mean, it's not massive. It's just took all that away. Every bit of it. So when I've got to here, obviously I'm not going to say, oh, well, I would have done this and I would have done that. I wouldn't have. So what I would have done here is when I've seen this break of structure, this is why it's marked up with a purple. When I've seen this break of structure here, then if I was following the market, I would have seen the market as like this. So we've got three, one after the other candles. I would have seen that as movement, as a little mini pullback. We've got an imbalance there. It's pulled back into the imbalance, not pulled back into anything major, but it's pulled back into an imbalance. So, and off of three bullish candles after a little bit of a downtrend and a break of structure. So to me, that is like that would count for me as a valid pullback. So keep going. You're always following your structure. So watching this, you're marking your structure out. Wrong one, sorry. This would have been break, internal break. This is a trade I've taken as well. This is the candle. Wow, I've got this candle, to be fair. I think it was like something like this. I'm not sure. I did mark it out, but because I hide them like that, I don't really. But this is obviously me fibbing my. This is me fibbing my breakout of this pullback. This is the candle that I've chose. An institutional candle. I must have just entered on a lower time frame. It's just gone, it's deleted. All the way through. You're marking all the way. You're marking BOSs and your CTS. BOS and your CTS. If you don't break a structure, you're more than likely going to continue the structure. All the way. Trade. So you've got your breaker structure here. After this uptrend, got your breaker structure here from that level. Why I've put it there. Got your breaker structure there. It's a strong breaker structure. Little tiny bit of a pullback, but it's structure. So obviously the reason I've got this there is because I've probably fibbed that. Find the area in this 61.8 to 80% line. Forward this a bit. So this big trade, this is the last, it's not the last trade I took, but it's a trade that I waited a very long time for. In between waiting, I had these trades. This little one here is just my example. That's my exact trade, that one. This big trade, I waited a long time. Well, I had this marked up for a very long time. See, I had it marked up from here, and this was on a low time frame. I marked this out. Again, this is recorded in my channel, something like 300 and something %. But I think the thing is with smart money, a lot of the times you're going to be waiting for them good entries. I mean, you can tell why a lot of smart money people wait a long time for their entries. They say it's better to wait a time, or it's better to be patient. And you can see why when you look at stuff like this is because in this area, I had this trade, this trade, this trade, and that trade. This was all in like 3 days, I think, all these, and it was something like 800% all in all. I had something like, I had a decent gain on account of these, but this was the real trade I was waiting for. I had a limit order on this, and that was from this break of structure here, and the deleted it now, but the fib was quite, I think I fibbed from there to there, and I found that. I'll just have a quick gander. Yeah, so this is what I found in the 61.8 after this massive breakdown. I waited for that. It's this, because I'm waiting for this big trade. I have loads of little trades in between. I mean, they're not little; they're still decent sized trades, but these are what you wait for. I mean, I'm not going to lie. This went all the way down to there, and I did have it, and it's all, you'll see it all in my channel if you want to go back and look at it. It did go all the way down to there, and I opened hedge long with take profit at 18k. But the reason this got out, I did it the wrong way round. On this, I set my take profit to my stop loss to there on my short, when I should have set my stop loss to there on my short. But I set it at 18k, and I meant to put it at 18 odd, 18.4 or something. Would have done it to 18.4 when we broke down here. I would have still been in that, and my long would have just took. Set it. Set this range up. This was the range I got from here. Is my that one candle, I believe. Yeah, the last candle in that area, the last institutional candle on the breakout in the 61.8 from the full wave. That's what I chose. Works all over. Yeah, it kicked me out of there. but not only does it work on these. I mean, I haven't tried it on all the coins, but I've tried it on FOREX. Shows pretty much the same kind of results. You're getting decent sized trades, but you've got to be patient with. So just trying to find what I've done, because all these examples here, I put all these inside of my channel. Hang on. It's still showing the it's still showing the so I've been testing it on forum. It's much cleaner on FOREX when I've been testing it. Showing it on the data. Oh, watch me now. I'm just not finding this. It's fun. Did have it all on here. I don't know where it's gone. Yeah, I don't know where this has gone. I did have it all on here. I was showing it over day to people in my other life. Yeah, God knows. But it's it works in all the time frame. I mean, all the time frames, and I've only tested it on the actual. I've only tested it on the actual big coins, like obviously the Ethereum and Bitcoin. So we'll be showing the full course and the full way to get the entries when I open the course up to everybody, just so everybody can see how I do it. So I'll just quickly go over the rules, what I have in place for it. And here's just a example of, I know it's not going to sound good, but here's just an example of what's been doing, what's been happening to me over the last few weeks, like 2 weeks. I've only took, I think I've took 4 trades or 3 or 4 trades in the last 2 weeks, and this is what's happened to me. So this, where is it? Yeah, here we are. Look. So when the news is hit the other day about Brazil, this was my setup. This was obviously my institutional thing. I waited for price to go to that, and then I waited for it. I waited for the 15-minute POI. I entered it, and then all of a sudden, bang! I entered it around here somewhere, and all of a sudden, bang! Killed my short. Or a bit. So that's what's been happening lately. But it is what it is. You can't win them all. So what else I've been doing, as well as this, is I've been adding to it support and resistance zones, and they seem to work pretty well. I mean, this whole bit of chart here, this is why I've not really traded. I wouldn't trade straight off a support or resistance zone. Just not our trade. I'm just trying to add these areas as well onto this. The next strategy I have is just about support and resistance zones, but they are going to be, if the POIs are like that, that's going to be the entry you take. So what the way I've been doing it is analyze the structure in the 1 hour. This is the rules I've got. So I'm analyzing the structure in the 1 hour. I know this says 4 hour, but you'll quite often find breaker structure on the 4 hour, and the hourly is nearly the same kind of structure. So I analyze the structure on the 1 hour time frame, or the time frame you're using, and I find out if there's a real break. Now this is going to be we're on the hourly structure here anyway. So we've got decent breaks across. We've got a decent break of this, we've got a decent break of the 4 hour, we've got a decent break of the hour. So you find the first pullback wave, I mean, it can pull back into like your 50 zone or your golden pocket, sorry. But what I've been doing is marking up every single one, every single breaker structure, every single continue the structure, and this is how I've been coming up with these. So I'm waiting for price all the time. Now this would be a nice, if price could come back to here, this is what I've been waiting for. This is why my alerts are on just above my zones all the time. Here's another one. These are what I put on. I would have wanted price to come down to here. I mean, if you fib this, I'm just looking at the safest, trying to look at the safest and most inexpensive price to buy things. So this here is my hourly POI, and I would keep this on my chart for if this breaks back down, because then obviously you're more than likely going to get a reaction from areas like this, because this is an equal low. So if they don't hit, you always follow that. You're always following price. You're always going to follow price. But if they don't hit your areas, keep them on, because they'll still be relevant in the future. Well, they could still be relevant, but you're always following the price. So we've got this one here. We've got another breakout here. after a little mini downtrend. So what I've done here, this was a losing trade. It's touched my hourly, but this is, I'm just showing you the process that I go through. So there's your breakout wave. You've got a massive imbalance. You've got a pullback. It might not be to the where I've been saying, to the 61.8, but it's pulled back into the 50. Then we've got this here. This is your next high that we need to be broken, or next structure that needs to be broken for you to do another fib. So I've fibbed down here, and this is what I've got. This candle here. So the rules are, if I get a touch on the hourly from watching this back down on the 15 minutes. See, this is why price is messed up, I think, over the last few weeks. So I've marked out, this was the hourly POI. So the rule is wait for a break, a proper break, and then wait for a natural pullback. But these wicks, this is why there's two CTSs, there's two big wicks here, and this is what's been like doing me over the last few weeks. Like I say, I've only took 4 trades, I think. So I watched this on the 15 minutes, this natural pullback. I'm waiting for it to come into this POI zone, and it's touched into it here. So my structure then is, I don't know what to do with that. It's not very clear. If it's not clear, miss it out. But the structure to me, just count that in. That's the structure on the 15 minutes when it's hit the order block, when it's hit the POI hourly. So say marked out this as a high, when in actual fact this big wick on the 15 minutes would be the most recent high to break, but it's literally just messed the full works up, because it's just more like I say, the size of it's just killed everyone. So I ended up just marking this as a structure, see if it broke, and it broke it cleanly. And I did, however, set this as a limit, and it did fail. But that is the process of my double order block. I mean, you don't need to do the fib, but yeah, I did literally set a limit there with a stop loss there, or 0.9 stop loss, but it still broke this like mini structure. I mean, no, it's just a loss symbol. I was targeting like this CTS, which is decent with 24 risk to reward. So let me just put this. Can you see this? Can you see my? Can you see Discord coming on?
Yes, we can.
Yes.
Yeah, we can see it.
Oh man. I'm gonna have to. I had it on. There isn't a way I can just record on, is there? No. No, there's no way I can put it on. So there's no way I can put my Discord on into This is what.
You can pull your
Well,
Discord up.
How do I do it?
Well, if just you've got the Discord icon, haven't you, on your desktop?
Yeah. Yeah, but it won't show, will it, on a stream?
Depends. I think so, because you're sharing the whole screen, so I should imagine so.
No, I'm not. I'm sharing this window. That's
Oh,
what
you're
I'm
just
sharing.
sharing a window. Okay.
Yeah, I'm just sharing window because I've got like multiple windows open. Yeah. So, I'll have to just like open the course because all this is explained. All this, what I'm on about is all explained in detail with all the definitions. But the actual trading itself is it's a double order block or double POI with the lower time frame as your entry. So you've got your 1 hour. I've only done it on the 1 hour and 15 minutes. I do know it works on others because I've tried it. Live tested it, but I have tried it. It does work on others, and the double order block is just so you can get a smaller risk to reward. But you're I did do a little drawing, didn't I, earlier? So that is all that is. Literally waiting for first break of structure, marking out your hourly. Just you need to get it. You need to just think of it like this. That's all. That's the best way I can say it. You wait for your break of structure. Your first pullback. You look for your imbalances in here, or you look for your imbalances to show you smart money's entered the market. You mark your institutional candle out in the 61.8. This one, sorry. This is your first. This is your signal. You've got imbalance going up, so you know it's broke it with strength and imbalance. Then we've got a pullback to the 61.8 to the golden zone. This is your signal. So the next thing you're waiting for is your natural pullback after a pullback wave. You're marking out your institutional candle, which preferably you could have a candle that goes into there. It don't matter, but as long as it's below the 50 and in this, I try and get one in this 61.8 to 80. You're marking that out. You're waiting for it to hit on the higher time frame, 1 hour. You're waiting for it to hit the higher time frame institutional candle. You're watching this on the 15 minutes, and as you're coming towards it, you're marking out break of structure on your 15 minute because the 15 minutes a downtrend. The hour is an uptrend. It's just doing a pullback. It's just doing a pullback wave. On the 15 minutes, it's bearish. So when it comes to here, you mark out this, you set an alert on that 15 minutes. When it's broke it cleanly. You're not always going to get a clear break. And it's fine if you've broke it, but not massively, or you've not broke it like with, say, 4 or 5 candles. If you've just broke it with 1 or 2, fine. A bit more risky, but it's still fine. You really want to be trying to find the best breaks, and then you can set your limit order up at 30% of the 15-minute institutional candle. The way quickly go over the institutional candle stuff. All this is I feel like I need a bigger TV, mate. Bigger screen.
It's good. We can see everything, don't worry.
So just quickly go over the institutional candles. You're waiting for a break of structure. It don't help with all these lines. I hate these. I hate with all these lines. You're waiting for your break of structure, and then you are fibbing your full wave, your full break of structure wave. This here, and an institutional candle will be on the 15-minute. That's why it don't look good. I've got an example here. Is this what I'm doing earlier?
I think you're on the 14-hour.
God. That'll be all right, won't it?
Yeah. There'll be some waiting.
So the institutional candles. This, I know I'm just going over like different things. The institutional candles will be after your breakout. You find the bottom. Obviously, you know where the bottom is because you've pulled back away from it. And you fib your break of structure. Fib the full lot. The institutional candle will be the last in an up movement. It will be the last down, not the last down of a wave, because the last down of a wave, you'll normally find that the bigger or the too far away. Sometimes this pullback would have gone down here and then broke out. Your institutional candle would still be there because that's in the 61.8. And sometimes you'll find that your order block is there, and a lot of the times it doesn't hit the order block, but it'll hit the institutional candle. So that's your institutional candle in the 61.8 to the 80%. Last down candle in an up movement and last up candle in a down movement, not the last candle of the wave. Just bear that in mind, not the last candle of the wave. And what I do once I'm in a trade, if you want to try and be safe in a trade, obviously people do move to break evens, but say, and I'll do a quick drawing here of it, and it works. So say you're in an uptrend. So this is what I've learned is when you're in, just say you're in this trade and you've jumped in here, so you're in here somewhere. When you're in it and you're watching it every, I don't know, just say you're checking it just say you're watching it on the 15 minutes and you're checking it. You always look for a safety candle, and a safety candle is when you've had like your when you've had your CTS, so you're continuing the structure, you know that's a valid BOS. So these are the levels you're waiting for it to break. So when you have your natural pullback, this wave, what you want to do is, if this is your trade, just say, I don't know, just say you're in there and this is your trade and you're wanting to go all the way up here. And so the first thing you want in your trade, and you can go back and back test it yourself and have a look in trades that you've done. So when you get this first push, and you get a natural pullback. But you've got into this trade by a limit order. Limit is just open. Limit order has just opened. It's got you in the trade. You've waited for. Because you've waited for this. So what happens is when you've opened your limit order, you've gone. Then you've got started a natural pullback to the 61.8 you're open. You open it, don't go any further. But you marked out this because you know now you're here somewhere, and you know that this is a valid pullback because there's multiple down candles. So you can definitely mark this up as CTS. So this is the area you want it to break after it's finished its natural pullback. Sometimes it can go straight down, but if you're in a trade, you're going to be in a trade because you've followed the market, you've worked it out, you've waited for these POIs, order blocks, support and resistance zone, however you want to trade. But in my case, the POIs. So you know that you should be in the right place. Nothing's 100%, but you should be in the right place. So you're not expecting it to come all the way back down here and hit your stop loss. So when you've got this natural pullback here, when it's reached a certain area, when it's reached like 80% zone or whatever, it's reached into the golden zone, and then it starts its natural push to break out again, well, to continue the structure. When you see the natural, when you see a few candles, and so you feel like this pullback is over now, it's retraced far enough, then you can mark out your breaker structure line. So what happens then is a lot of people move their stop loss and they're getting kicked out trades, and they're a bit gutted because it'll kick them out of the trade, and then it will it'll kick them out of the trade, and then it'll carry on going in the same way as their trade was open. So what I've found, and it works quite often, a thing I've found out of it, and you can, like I say, you can go and back test everything I say, is when you see this pullback and you've marked this BOS out, because we're up here now, we know that this pullback's over. You look left on your chart and you'll see what candle this has touched, any candle, whatever candle it's touched. Then your stop loss then can be moved to below that candle, because what I know, price is not going to look like this. Price will look like, it could look like the, it could just look, it could do that. I've seen it plenty of times. I'm just trying to make it a clear image for you. But if you go and back test, you'll see what I mean. So a lot of people, and I've done it myself, and a lot of people then will put this CTS line, they've broke this CTS line, so they know that they're still in an uptrend. But a lot of people, they either follow the price too closely, not giving the trade enough room to breathe, or they see this and they'll put their stop loss there on this breaker structure, just under the breaker structure line. That's where they'll put the stop loss. A lot of people, and that's why you see trend lines. That's why you see trend lines do this, and then do that, and then carry on going, and then do that, and then carry on going, because it's just the market manipulating to take all these stop losses from just underneath this trend line. So what people do, and it does happen, and you can't say none of you have done it, because I've done it. I know I've done it. I don't do it anymore, but I have done it in the past. So what I used to do is when I would trade in trend lines and stuff like that, and support and resistance zone, I used to leave, and this is what happens. But if you would have followed this, like this is a pullback, and instead of putting your stop loss here, so market can be manipulated because they know there's loads of stop losses here, what you would have done is you would have gone left from this low to see what candle it hit, and you will find it a lot of the times. You will see that candle. You will see that candle do that. People have got their stop losses there, but this pullback has pulled into this candle. So the best thing to do, and you'll kick yourself if you see it, and you'll think, how does that work? But it works. You put your stop loss just underneath this candle. So you haven't got your stop loss here, you've got your stop loss underneath this safety candle. And what you'll see happen a lot of the times is price does this. It manipulates to take all these stop losses because it's under the most recent low, most significant low, so to say. You'll see it manipulate and then it'll bounce back up. But back test this now, what I've showed you, you'll see that it'll kill everyone's stop losses on this low. But because you've put it on your you've put it underneath the safety candle, it doesn't hit. It does hit sometimes, but very rarely, and well, less than it does hit this. So that's how I've been staying in my trade. So I always, like I say, when I'm in the trade, I find out where this low has retraced to. There, just say my candle is there. I would put this stop loss below that candle. And what you see quite often is price will do that. It won't go past that, but it'll break this low because that's where people have got those stop losses. It does work, and it works pretty often. I did have all my examples to hand before. Like I say, I don't plan my trades. I just plan I don't plan what I'm going to show people. I just show straight off at spots. I mean, it is what it is. I just show what I'm showing. Let me try and see if there is one here somewhere. So this is kind of what I mean. It doesn't show that it would do it, but so if I was in this trade from here, what I mean by safety candle is I'll wait for that and I'll wait for the pullback down. When this pullback, so I know it's only one candle, but I'm just trying to show you exactly what I mean. So what I would do is, and you can see it works, if you back test it or you watch one of your trades play out, if you're in a trade long enough, and you can see multiple waves. When you get the pullback, instead of putting the stop loss here, you would pull back, see where the candle ends. It's not had the power to break that candle, so the stop loss then my stop loss would go to there. Even if I only entered there, my stop loss would be under there. It won't be under this low. Same as this pullback. I would wait for the bottom. It goes to that candle. So that is my safety candle. So now my stop loss will be below there. It's the same everywhere. So we're following this again. We've got this. We've got just a normal pullback. That's my safety candle. Stop loss will be there underneath that safety candle. Same again here. We get a pullback. Pulls to this candle. My stop loss will be under that. So it would have pulled me straight out there. And then we get a little range here before we. That's how I stay in my. That's how I stay in my trades and try and be safe in my trades. Just how it goes. So let me try and. I did have an example of this. What I was showing to Craig and a few others the other day. But I don't know. What is it? I did have an example marked out. So,
While you're looking for that, somebody asked if it's been streamed to YouTube, so I'm just going to drop the YouTube link into the chat for everybody.
yeah, no. I'm gonna try and put Discord on just so I can show what I mean. This. If it asks for my number. Pull this onto. Is it still showing my BTC chart?
We can see your BTC chart.
I'm just trying to log into my Discord so I can show people.
No problem. I'm just pasting the YouTube link in so everybody can see the recording for you.
David, is there a way I can just put I can share my screen to my how can I share my screen into my Discord now? Is there a way?
When you've shared, you can need to go and choose the screen instead. Because we can see it, we can see your bar, your start bar when you go down to Windows start bar. So I'm sure that you're sharing the whole of your screen. So if you click there, no, it doesn't.
Yeah, I have. It doesn't show it, does it? So yeah, I'd like to. I would have liked to.
Your browser's open in full mode. Looking at it.
Is it? I would just like to show my. I'd just like to show my Discord. That's all, just to show the.
You mean the Discord for David inside DaviddTech?
Yeah, the channel.
Yeah.
Just so I could just show people the actual. You know the.
Do you want me to share my screen?
Or if you could just put yeah, if you want.
What I'll do
yeah,
is
if you want.
Yeah, I'll share my screen very quickly and see if I can put it up for you.
It's just so I can show people like the setup of the thing. It's easier to follow on, you know, the
on Discord.
Discord.
Yep. Okay. Let me have a look, see if I can share my screen for you. So when you click share screen scope, it gives you an option. So if you click share screen, you can share the screen or the application. You've obviously shared the application.
Yeah.
If you go to share screens, press share screens on your computer, and then go, yeah, that's it, screens up top there. No. Okay, let me.
It's just so I could show people my.
Just putting mine up now. I believe that mine's shared now as well. Oh, blimey. So let me go back over.
SMC. It's just so I could show people the setup of it, and you know, so I've got like the images there. Just so it's a bit more clearer for when people
I've got my screen
trying to
shared.
follow what I'm doing.
I'm on your channel at the moment.
Just in case anyone wanted to see it until I release it. So, as I was saying, It does work on your forexes. I have tested it on forex. I had Craig in. I had Craig till about 11:30 UK time, from about 9 o'clock, and I went through some forex with him, and I showed him it on forex, and it working on forex. I actually will have to just try. I'm going to try again on the forex, because I did have things set up for forex. I'm not sure which one it was.
On my screenscope, I'm currently sharing your channel.
Yeah. Just go down a bit, so you can see like an example and a write up about it, just so people can see exactly how it's set up, because I don't want people to be like not understanding what I'm trying to say.
Sure.
And I will be releasing the channel when it's finished. But
It's working on.
trying to think of which one I did actually have some back tests on thingy, but must have it normally always saves them, but it must have deleted them for some reason. But if you want to just have anybody wants to just have a quick look on my channel, David's got it it's showing on his screen.
Yeah, it's down the side here underneath trading strategy setups, and you can find Scope's channel there.
And all my trades, what I've gone over on BTC earlier, you'll be able to see what I mean when I'm actually about my trades. They're all recorded. Might not have understood it, so you could go back and you could look at where I've entered, and they're exactly the same. So I'm can follow it easier. You know what I'm saying. You'll get an extra piece of it. So on my screen now, I've got forex on.
2 seconds, Scope. I'm just going to come back to your screen so that I can stream it to YouTube. There you go.
I haven't got the trades on. I did have them on. I actually literally cannot remember where I had them, but I did actually have them. But let's just try and go. So do one here, because if I drop time frame, completely lose all my stuff in there. Always does it every time I'm trying to show someone something far away in the chart. So just fine. Right, let's just take this one for example. I'm not trying to cherry. It works quite often, and it works. Probably might not even work here, but so this is on the hourly. So because it's a clean chart and it's going to be a bit more easy to follow, I'll show you it again on here. So just say you are here in price, just here, or I don't know, anywhere around this area. So what you're doing is you are looking at where your price is and looking at what's recently. So your hourly structure will look like this. But you know that this is your last decent low because of the candles. So you know that's your break of structure from this uptrend. So you've got, this is how you would analyze in with how I'm saying things. Break a structure on the hourly. You've got your continue the structure on the hourly. Break a structure there. Got a pullback from this. It goes into the discount area. This is your last hourly candle. It hits it and goes down. Not only that, obviously, this is just your signal to say it's going to be changing. So following the structure again, and you're waiting for any kind of, every time you're breaking, you're looking for your imbalances. If there's imbalance in your waves, you're fibbing that wave. Just looking for your opportunity to get in. It's looking for every pullback. You're looking for a healthy market to jump in to go short with. That's all I do. It works on every time frame. So you're essentially looking for that. It's only come back to the 30 zone here, but it pulled back a bit further. It's not a market I want to be in. So count this as your pullback. Count that as your pullback. What's your next? CTS. Go down to that. Could either have that there, or you could have that all the way down to there, and then to there. It's however you want to pull your make your structure. You see it. So this one's your CTS. So again, you're looking for that. You don't have your in that 1 hour. In that 1 hour, you don't have institutional candle in this area, but you have imbalance. Not one wave. So you are just waiting for price to pull back into every time you CTS, and then you get a pullback. Whether you do that one or whether you do that one, there's not much difference. So when you're fibbing a wave, if you look, this is that one wave, and this is two waves, and that's both on the hourly. So the candle is not the institutional candle. It's always going to be in that kind of area. Whether so you can't really get much wrong if you looking for an institutional candle. You can't really get much. So the candle could be in there, and the area doesn't change much. This is the first one. This is the second one. So the area there's not much change in the area, with the institutional candle. And a lot of times you'll find an institutional candle it'll be the same one, what's in this area, as what would be in this area. So you just keep following your price. Hourly. There. Decision. Got one here, but it would have 15 minutes. You didn't get closed below it. above it, should I say. But you might have, if you would have had a really tight stop loss on that, just say that's your 30%, and you're targeting this because this is your most recent. I mean, if you've got a really, really tight stop loss on there, you would have lost at that. So it's all obviously trial. You wouldn't have, if you would have had a decent size stop loss on there, you wouldn't have lost. But for me, I probably would have lost that because I try and put my just above, try and join in on the 30. Stop loss just above. It doesn't work. It doesn't work. But on the FOREX, you're normally getting better entries anyway. This. So follow. You're in a downtrend, following this and this. That's all you're following. You're in a downtrend, so you're just following your BOS and your CT. Oh God, what is going on? You're just following your breaker structure and you continue the structure. When you're downtrend, it don't matter what you hit, but you're expecting, if it doesn't hit the breaker structure, you're expecting it to hit the CTS. If it doesn't hit the CTS, you're expecting it on a drop down. You're expecting it to come back up to break structure, and that's just how I've been following it. So there's a breaker structure. So now you've got this breaker structure, and probably me being tight or just trying to be too safe, I might not be getting as many entries as everyone else, but I know once I get an entry, decent entries. So now we've got that. You're just waiting for now a decent you've got a pullback here. See, when you got to here, when you broke out, you had this candle, this one, but they're showing wicks. So they're still showing buying pressure. So there's still pressure going back up. Then you pushed up a little, you had a little last push. Then you had this indecision. So this basically is not, it's showing weakness, but it's not showing an end. That's the rate. That's your range. From this indecision candle all the way along, nearly every single candle is crap. So you have a decent pullback. That's what you're waiting for, a decent pullback. So once you've seen this decent pullback, you can fib from the low, which you've already marked up because you're following structure, to the high. This is the 2 also. So the institutional candle, what I'm looking at is here. This one. So I would be expecting price to hit this. Obviously, it's a real break. It's a strong break. I know you've got an immediate answer, but it carried on going up. This candle is not even half of this candle. For it to be a fake break, what I say, when it breaks it, and just say the candle went there, but then this black candle was full size of this, or bigger, and it's just completely, a bigger answer to selling. That's how I would say it would be a failed break. So it just bounced back up, and then went up the size of this candle. So I've marked this out as my institutional candle because it's the 61.8. This is the movement up. This is the break. This is the breakout wave. Reach the 50, and it's carried on going. But price hits this, I would have taken a trade on that pullback. but it didn't hit it here, so I didn't have the trade. You're watching this back on the 15 minutes, it didn't hit it there, but it's always in future. It's gonna be, I always say, keep it in the future. You can take a trade off that. If you would have took a trade off the hourly, I try not to trade trades off the hourly. I wait for a 15-minute after the POI. You could take a trade off it, but it's not as safe as you think and not as secure. So from here, when it's hit this, what I try to do then is 15-minute chart. I look for a recent high to be broken, and this is a high, but it's not a very. It's only like one candle really. There's two, but not continuously. I'd say there's that. These are all wiki candles. They're all it's like rangy candles. That I won't call that any kind of significant thing really. This is multiple candles, so that shows me. I know it's not pulled back like we're looking for the retracement to the 30 or whatever. I mean to the 61.8. This is only pulled back to the 30, but because they've got multiple candles, it is still a valid pullback. It is still structure. This to me is not structure. This is all rangy and wiki, so I don't really try and count all that. Try and wait for stuff like this. These are the two. This one is a strong candle. Maybe that's your most recent. So what I try to do is try to wait for that and then try to fib this breakout, whether it be there or whether it be there, whichever you do. And I try to find institutional candle for the 15 minutes. Can't find a decent one. Big. That's bigger than my hourly. I drop down time frames. See if you can find a better one. If you can't find one, skip the trade. That's the same size one. You can either skip the trade. For me, I skip the trade. It's not clear enough. It's not pulled back. It's not pulled back into the 61.8. It's pulled back into the hourly nicely and had a nice reaction off the hourly. But for me, from here, we need a decent 15-minute break and we need a retest of a 15-minute institutional candle. So ideally, what I would have wanted for this to work is an institutional candle after this break. This little pullback here, what's happened here, I would have wanted that to come and test an institutional candle I found in here. Say, I found one here. I would want that pullback for me to enter that market, and it's just me being safe. I would have wanted price to come to there and then go. That's all I wait for. And if it doesn't do it, to me, I don't mind missing it. I don't need to trade. I'm happy to not trade. I'll still look at the charts every day. But for me and the courses that I've followed and the smart money I've followed, this is the best way I have found to try and be safer. The market I want to be in is one that retraces nicely, gets manipulated to retrace into the 61.8, and then it gets manipulated again to come back and hit your 15-minute POI after hitting your 1 hour POI. It's a 15-minute POI. That is the strongest and safest market. The reason being is when you hit the hourly order block or POI, then you go up, break your last 15-minute structure, and you hit your 15-minute. A lot of retail traders and big players will be in the same market, will be in the same kind of trades. that's why a lot of the times order blocks, you see a big bounce out of them, because you can see this would have been, or this would have been institutionals and other people, because, and retail traders as well, because all the orders at once, and there's that many people trying to follow smart money now. This one would have been an order block, as well as your POI, however you wanted to do it, however you wanted to thing it, but it's an institutional candle. Smart money and retail is doing all smart money now, so they're following it. So this, I would suggest this, they have it in, and it's retail plus smart money all at once. Orders, bang, gone. For me, the best way for me to do it is wait for a pullback into a 15-minute institutional candle after it's done that, and that is the strongest, healthiest market that I can find, and I have found to be in. If it doesn't do stuff like that, I mean, you're happy, you're okay to jump into the hourly, but for me, I'd rather wait for a double POI confirmation. So you're waiting for your pulse wave 1, marking your structure out, you're waiting for a pullback into the 61.8, hitting an hour POI, marking it out, then waiting for a breaker structure on the lower time frame after hitting your higher time frame POI. It does work, has worked, and I'm not going to say it's always going to work, but this is what I've found ever lately, and it's always been working for me. And like, this is all I'm going to try and trade for a while. I'm going to obviously add stuff to it. The next thing I'm going to add to it is, like I said earlier, is I'm adding some key levels as well as POIs. So what would happen with the key levels and the support and resistance and that would be just your normal. This would just be your key levels would be like your normal order blocks and your support and resistance zones, as well as finding your institutional candle. This one's your institutional candle. So what you do find is a lot of these institutional candles work very well, and if they fail, then you've got the key level to back it up with. So for me, that is my next step on adding to this strategy. I think the stop losses are fine. I don't think I need to do anything with stop losses whatsoever. Decent enough. I know someone was saying if you use leverage, it's a sure way to lose your account. I've set this sub account up months ago and I've never reloaded it once. And I've gained and I've lost on it, and I've gained and I've lost on it. Just I've been testing, but for the last 2 weeks has been crap. I haven't lost a major amount. I've lost probably 4 trades, but the few weeks previous to that, the month before that, the full month before that, I had an absolute monster month, and I got thinking so many days I got 85% gain on account on a sort of small sub account. So for me, when people say if you use leverage you're going to lose your money, for me, I don't think it's right. It just depends how much you're into your strategy. I mean, at 0.16 stop loss is not going to kill you, even if you lose 10 of them trades. It's not going to kill you, even if you use leverage and you lose 10 of them trades. But for me, these have been high probability, these trades, and they have been for quite a while. And all it is the breaker structure, double POI, and institutional candle. That's all I've been doing. That's all I've done for that many times. And all my trades are in for you to have a look at. Every trade, what you see on these charts, even Ethereum one, they're all in my channel, and you can see how I've been going about them. and pretty much that's about it. My channel will be open at probably the end of this week now. I have just my rules to put in, and then you'll be able to see it. But there will be two strategies into one. It's all the same kind of strategy, but the difference in the two, what I'm telling you is, one of the strategies is break the trend, and one of them is follow the trend. So one of them is if you load a chart up, you're already in the trend. It's how to try and get into that market instead of just jumping in here or here. You know, it's a strategy to try and jump in to this market. And then the next one is the breaker structure. I like the breaker structure one the best. The breaker structure one the best seems to give me the best results, because when you're trying to jump into continue the structure, really all that you're well, to be fair, I don't know about anyone else, but for me, if I am trying to continue, just trying to follow the structure, if you've already got this, for me, if I'm trying to get in and I can't get in there, and I do get in there, the thing I'm going to aim for is that I'm not going to try and aim right up here. I'm going to aim for that. So the amount of trade you're going to catch, or the amount of action you're going to catch, is not very big. It's just literally just this, because you're going to try and collect its structure, because you don't know what's going to happen. You don't know how weak that trend is. You don't know if it's up for if it's going to end. So that's why I prefer these breaker structures, because when you get your breaker structure, say if this has come from all the way down here, this zigzag's come from all the way down here, when you get your breaker structure, you could potentially be taking taking out every single bit of structure down. So you've got the breaker structure there, and then you're getting on, just say you're getting on your entry here, you're going to be taking from here, you're going to be taking all that. It's coming, well, a lot of the times it does retrace all the way back and take a lot of this liquidity out under here. Whereas, like I say, follow the trend, you're just going to you're going to try and get in here, and all you can really hope for, or all you're going to be safe to be taking, is just literally that, because you're taking a segment out of it. I mean, you could hold it, but if the trend's already going and the trend's already been going, you don't know when that's going to end. You don't know when breaker structure trend's going to end, but you've got more chance of breaker structure giving you more profit than you have CTS, I think, unless you're in a massive moving market. For me, the breaker structure one's best, but there will be break the trend and follow the trend. They're the two structures I will have in. Then my next one will be obviously adding key levels. I'm just going over my notes here. So there is a guy I've been watching trade like this. He takes one trade a week. That's all he takes, one trade a week. And that is on any time frame. It doesn't trade the 1 hours. It doesn't trade the 1 minutes or out like that, or 5 minutes. It trades the 1 hours, and he'll probably take one trade a week, and he's happy at taking one trade a week. So for me now, for BTC, I know it does look a bit messy, but this is a losing trade. But for me, I've got this marked out. We've had this pullback here. Not a massive pullback, but it is just below it's wick just below the 50. I would want price to be coming down to. I would want price to come down to here, because we're so low in price at the minute, it's like everything's up in air, I think, with Bitcoin. Like I say, this one, it's not, this hourly order block POI has not failed, because you can see we've had a nice reaction there. It's gone up. We've hit it again, had a nice reaction, gone up. We've hit it again, had another reaction, gone up. So to me, these are always relevant. Your higher time frames are always relevant. It's just your entries. If you can catch a 15-minute entry, if this would have just gone up, I would have been in a brilliant trade. But this is what's messing me up. These big wicks. The main structure. I mean, if you put, let me just put these indicators on what I have. If you put your higher high, higher low, look, you can see this is your higher high, higher low indicator. This is your last structure. So when I said earlier, if it's not a clear market, don't take it. The reason I said that is because this, to me, is kind of the structure on your 15 minutes, but it's not very clear, because this is what's messed it up. This big wick and these big candles up and down. This one killed me the other day. This big Brazil candle, I think it was that one or that one, Brazil accepting BTC, that killed me. I was in a short there. It killed a few people. I took that short from, around here somewhere. It's that's what's killed me. So the last few trades for me have not been very good, but I don't mind. Is what it is. As soon as the market sorts itself out, I'm sure I'll catch them again easily enough. But if price does come down here, I'll be more than happy to, when it hits it, mark a 15-minute breaker structure out. If I get a breaker structure on the 15 minutes, mark the institutional candle out, and hopefully I can get a nice little 15-minute candle like that, where I'm getting a good risk to reward, where I'm entering stop loss just here, and I'm aiming for that recent high, which is a 25R. These are what type of things I'm waiting for. And they do work. I've seen them work, and watched them work, and I've traded them. So I'm not like showing you something that doesn't work. It absolutely does work, but just afraid. Like I say, last couple of weeks it's been not very good for me. But every other trade, all these trades are all in my book. See them all in my channel. So the next time I will do another one is when my course is finished, and I've added the next part to this, and then you can see when I add them both together. So the next part, I'm just testing it out at the minute. This is my next part. This SR zones, POIs, key levels. I'm trying to add all them together. And then that's smart money concepts, along with retail concepts, if you want to say it like that. So that's about all I've got for tonight.
Absolutely brilliant.
But if you like I say, if you want to jump into my channel now, send me a message. I will add you to the channel, no problem. But just know it's not finished yet. But everything will be a lot clearer when you see it on my channel. I've got literally, I don't have lines all like this on chart. I have literally clear images, clear trades, and trades that I've took, and they're all clear, and you can see exactly how I've done them and how I've taken them, and there's explanations to it all. For me, just looking at this, if I'd not seen someone trading like this before, I'd be like, what the chuffing hell is this? But like I say, that's why I've made my channel, so you can all see it. And if you want to be involved in the channel, just let me know, send me a message, I'll invite you straight to it, and you can just go through it. But bear in mind, it's not exactly finished yet, it will be soon. So just give me a message if you want to hear about it.
Thank you very much.
So
That's
that's about That's about all I've
Lots
got.
of information.
There is there is other information I've got, but that will be, where are we here? Trend line have we broken here? Yes. Right, so here we go. Look, this is what I'm trying. I'll show you exactly what I mean. We've just got this breaker structure here. This is on the hourly. This is what I marked out. This isn't my trade. If I would have took this trade, it would have been a winning trade. But an 0.85 stop loss is not bad. But this is what my charts look like without all the fibs on and that. This is how I, So what I've been showing you on BTC, that's just me trying to show you how to do it. But like my charts are normally clean. Like this, because I don't need to look every time I put a fig on, I delete it straight away. But so now we've got this BOS 15 minutes. What I've done there is I've waited for this to carry on, and then it's come back down. It's hit a point of interest on my on the higher time frame, on the hourly. So I've watched this go back on the 15 minutes. Just list to the 15 minutes. These are the structures I've followed, but it's hit this one. This is the last high. This is the highest point before it's hit it. It's crossing it again. I've had an alert on something else as well. So this is what I've set an alert for, this breaker structure on the 15 minutes. So now what I would wait for is on Ethereum is I'd wait for this to show me that it's pulling back. So we're having a decent pullback, and I would then fib the breakout wave, that being this from this low. So I would fib that, and the last institutional candle, if it pulls back from there or gives me one more candle, but doesn't close above that, the institutional candle I will mark up would be that. And that would be where I would want to take my trade. Targeting up here. That's exactly how I would have wanted to do it there and then. But a lot of the times when it hits your POI, you get these big wicks, which I showed you on BTC earlier. These are what are kind of ruining me at the minute. These big wicks. I'm not gonna take the close because obviously price has already been above there. So I'm literally, this is the highest point. I'm gonna have to take it. I'm gonna have to put an alert on it. That's my rules. So I'm not gonna change my rules just to suit. I think it looks like. But yeah, this is what I'd expect now. If price doesn't close above that, even if it does, if it goes to about there, my institutional candle is still here, and that's what I'd be looking to enter there for then targeting wherever this breakout ends, breaker structure, wherever it ends. If it ends above it, be looking at targeting there. If it ends below it, like it is down below it now, to me that's not strong enough for me to enter. So that's it. Yeah, that's all I've got.
You need some coffee, dude.
Yeah, I'm alright. Yeah, I'm just. It takes a while to explain how I'm doing it. You know what I mean? Because
it's brilliant
for me.
Brilliant.
For me, to try and explain something, it's harder for me to explain something. I just try and take the trades, and I don't plan these streams. Before I start them, I just leave my trades on chart like this, and then I just think, right, well, next time I do a stream, look at all this. This is just because all these lines and that. This is just because I'm trying to show people, and that to me is a horrible message art. But to me, this is how I can only show people.
Your process,
but when I try and show it in my course, it's a lot cleaner than this because all these images are split up separately.
Yeah, I saw.
And yeah, so if anyone wants to be in the course or anybody who wants to have a look at what I've got so far, it's nearly there. Just give me a message. I'll invite you straight to the channel, and you'll be able to just go through, and it's all clean as a whistle in there. To be fair.
Yeah. I'm gonna stop the live stream because it's limited to 2 hours and 30 minutes scope. So I don't know if anybody's got any questions before I stop the stream. It's not. It's only for the YouTube stream. The rest we can continue here. It's no problem. It's just for the YouTube stream. That was all. I don't know if anybody's got any questions.
I've got one. When is the course available? Learn a lot. Abides. I will literally give me 1 second. If you're on your, you can stop stream if you want, David. I'm just gonna invite Abides to the channel so we can see.
No problem whatsoever. I'll say goodbye to everybody on YouTube. You can find Scope's information on our Discord over here. If I close this window here, if you go over to here on Discord, you'll be able to see all of his information here. And that's about it. So I'll close the stream off of YouTube. Thanks, everybody. All right.
Thanks again.